Hello, good day, guys. My name is Nick, technical analyst for SuperForex. Today, we shall be looking at the technical analysis on the cryptocurrency pair BTC USD. And first, we'll be talking about fundamentals before we move right down to technicals, which is purely what we'll be seeing on the chart. Now, what we have seen currently is that the Bitcoin bears has been in a disbelief as BTC becomes the most performing asset of 2023. While we are assuming that the end of the Bitcoin bear market could be near as the bulls gather more pace, but don't rule out a market correction. Bitcoin has posted the strongest quarterly return since its November 2021 all-time high. Furthermore, the BTC has gained more than 80% since the beginning of the year, making it the best performing asset of 2023 so far. Comparatively, gold has gained just 9% in the same period, and the tech-heavy NASDAQ 100 has managed around 20% since January 1st. Additionally, the S&P 500 has managed just 8.5% gain since the beginning of the year. On April 17th, on-chain analytics provider Glassnode confirmed that Bitcoin's performance means that gold prices and other related could have a large amount of BTC. And a return profit recently in 2003, a total of 6.2 million BTC have returned to profit, representing almost a third of the supply. This gives an indication of just how large this cost basis foundation is below 30K. Now, what to expect from this? We are looking at momentum kicking, and we are looking at a correction of all this, which has happened in recent weeks. So an entry at this point, putting our landmark of first TP at 3458.10 zone before an extension to 30935.07 zone, of course, which is good money. If we're to make an entry at this point and let our trade run up to that point, we're looking at nothing less than 8,626 pips from that entry point, of course, which is good money. And that's our technical analysis on today's cryptocurrency BTC USD. Now let's move over to the stock markets. Hello, welcome back, guys. And on today's stock markets, we'll be having a look at Twitter. And we have seen that Twitter recently has been added to Dogecoin Ponzi scheme litigation if Elon Musk cannot get a case dismissed. Now, as the case is, Twitter will be added as a defendant in the class action lawsuit that alleges Dogecoin is a Ponzi scheme being manipulated by Elon Musk. If the plaintiffs get their way, the lawyer in the case called The Block says that the Dogecoin Foundation and Musk asked the U.S. Federal District Court in New York to dismiss the case against them on March 31st. Now, the case was brought by investors who lost money when the price of Dogecoin collapsed between 2019 and 2021. After Musk appeared to stop supporting the meme coin, during that period, Musk made many supportive tweets of the coin, saying that around May 21, 2021, he appeared on Saturday Night Live and called Dogecoin a hustle. And of course, the Dogecoin price plummeted, as the case was, and wiping out $86 billion in value as a result of this. Now, the suit claims that although Musk has been named personally as a defendant, Twitter itself has not yet been sued. But in October, Musk acquired Twitter and named himself as chief executive officer in early April, and he changed Twitter's logo for that of a Shiba Inu dog and the icon of Dogecoin. The price of Doge rallied 30% before collapsing again a few days later when Musk reported the logo back to the Bluebird. Now, what to expect from this? Recently, we have seen a rise in the Twitter stock, but with new information of Dogecoin being added as a Ponzi scheme litigation, we're expecting a fallback to at least the 50.59 zones, which is at about 23 pips from that entry point, and an extension to 48.44, which is about 44 pips from that entry point, of course, which is also good money. So that's our technical analysis today on today's CFD Twitter. I remain your host, Nick. Bye for now.